Hi friends. I love some TV. Love TV, love movies, love shows. I can be a binge watcher at times, especially in the evenings after the kids go down. One of my favorite types of shows is certainly investigations or crimes. And without fail, it seems, in every one of those shows or movies, there's always a critical eyewitness to tell what they saw, how it happened, what really went on. The problem, and we know this both historically and scientifically, is that a majority, at least a large portion of eyewitnesses, are inaccurate and at times completely unreliable. They have their own confirmation biases. They don't always understand what they saw in its proper context. They misremember important details, on and on and on and on. Well, you and I, right now, are eyewitnesses to the stock market. Well, just like in an investigative series, the most important thing to do is not merely hear the eyewitness, but look at the evidence. The evidence won't lie. And we believe that the data, the evidence that the market is sitting on will act the same way. So what is that data suggesting? As of right now, 458 of the 500 largest companies in the market have reported their earnings for the first quarter. And 77%, nearly 8 out of 10 of them, have beat or surprised to the upside. Man, it doesn't feel like that as an eyewitness, does it? It doesn't feel like nearly 8 out of 10 companies made more money in the first quarter than they thought they would 120 days ago. But that's what the evidence says. The evidence shows that housing, jobs, production, and consumption are not leading towards recession, but leading towards continued growth and expansion. Now, one of the difficult aspects of the moment that we're in is that it is a different experience than the previous two bear markets. So the last two bear markets we've had in 2018 and 2020, we had as investors a V bottom. Market came down and then it began to go up, and we can point to an exact day. In fact, those days are December 24th, 2020 and December 24th, 2018 and March 23rd, 2020. Both of those dates were the rock bottom, and then the market began to accelerate. We are not in a V bottom moment. We are in a U bottom. And so as the market has fallen and we are in bear market territory in several of the major indices, we're going to be here for longer. We're going to continue to see sharp rises and sharp decreases, volatility and trading intensity as we bang around here in this U-shaped bottom. And then we believe that with more evidence, more data, and more time, as we move through the warmer months and get into the late summer, early fall, we will begin as positive and supportive evidence and data continues to come out, not just for the first quarter, but then in the second quarter, we should begin to see the market accelerate. And if we go back and look, it'll be hard to pinpoint the day. We'll go back and say, there it was, the U-shaped recovery, which is different for investors than the previous two bear markets. Be patient, understand the moment that we're in, and don't be an eyewitness. Be an investigator, understanding the data and the evidence, which we believe suggests a second half of the year stock market acceleration. Thanks for watching. I'll see you next time.